18 years old is the age that I legally became an adult. Don't let the tie fool you, I really wasn't yet. And you could even argue that I'm still not now. But more important to me at the time, 18 years old is the age that I could legally begin investing in the stock market.
Yes!
But I wasn't interested in simply just investing in the stock market. I mean, come on, I was 18 years old. Life was so serious. My problems, dreams, and accomplishments were gonna be as big as they would ever be.
High school is such a serious thing. These problems matter.
I wanted to make money fast. I wanted to day trade stocks. But in order to understand how I got from this,
these problems matter,
to this,
yes,
I'll need to take you back to an influential high school teacher I had in a finance class. We'll call him Mr. H. Mr. H taught an introductory personal finance class, but that wasn't why he was influential to me. He was a bit of a strange guy, and I mean that mostly in a good way. What do you mean by mostly, Steve? Don't do that. Don't put me on the spot like that, okay? My friends who took that class with me will know what I mean. Anyway, personally, I'm always kind of intrigued by people who are a little bit different, because it's almost like they're in on some secret that no one else knows about, and I want to know what it is. So one of the weird things he would always do is take money out of his pockets in class. In particular, he would ask us questions like, what is this? What is money? And most of us would laugh and think this guy's just trying to flex how much money he has. Yeah, he would seriously take money out of his pocket. Sometimes it would be like $10 bills, sometimes it would even be $50 or $100, and he would just kind of wave it around and ask us those questions. But flex or no flex, to be honest with you, that question was probably like the defining question that led me down the path that I'm on today. What is this? What is money? You see, I didn't know it at the time, but Mr. H was actually secretly pursuing financial independence. Sure, he was primarily a high school math teacher, but this man knew how to grow his wealth regardless. It was common knowledge that he lived in a small apartment above a convenience store, and some kids in school made jokes about him because of this. Kids in high school are... But why did he do this? Surely in the small city that I'm from, where the cost of living is really low, he could have afforded a home for himself. He did that because he was intentionally living well below his means, which allowed him to save tons of money. And with that money, he was investing it all in the stock market. Mr. H was probably one of the first people to introduce the stock market to me in a very real way. One day he announced something that made me sit on the edge of my seat. He was going to set up a competition for us in the class to participate in a 30-day stock market challenge. Yeah, trading stocks. I know, so sick, right? Suffice to say, this was the coolest school assignment ever. Here's how it worked. We would use paper trading software to allow us to invest fake money. Whoever made the most amount of money at the end of the month would win. So paper trading's kind of like practice in the stock market. It's a really great way for people to kind of test it out without using actual real money. So I was super excited about this competition. I mean, I really wanted to win it. But I mean, I was 17 at the time and I had never invested money before or had any experience in the stock market whatsoever. So I had no idea what I was doing. I first tried trading stocks that had just had big moves. My logic kind of was, if a stock went down by a lot, maybe that meant it should go back up if I bought it at the right time. Remember, I said I had no idea what I was doing, okay? And this strategy obviously did not work very well, and all of the other strategies I came up with also just completely sucked. So unfortunately, I didn't even come close to winning this competition, but that didn't matter. What mattered was I was now fascinated by the stock market. I was completely hooked. And that's because the person who did win the competition saw their money increase by over 10-fold. This is what I would later know is called a 10-bagger, which is a very treasured achievement by stock market enthusiasts. When I saw that person multiply their money, their fake money, by 10 times, I thought to myself, oh my God, this is it for me. As soon as I turn 18, I'm gonna take all the money I have to my name and throw it all into the stock market. All I'd need were a couple 10-baggers and I would be set for life. Easy. So I committed myself for the next few months to intensively learning the intricacies of the stock market and how to be a successful day trader. I began learning how to read charts, understand momentum, getting set up with the best software, and setting up custom indicators and watch lists. Okay, so for those of you who were curious, I wanted to essentially give you a look at exactly what I was doing at this time. So the trading software that I was using here is called Thinkorswim, and it's by TD, and it was my favorite software to use. It was just had so many features. It was great. So basically what we're looking at here is something called a candlestick chart. And the reason it's called a candlestick chart is because, as you can see, they kind of look like little candlesticks. So basically the idea is that they'll either be green or red depending on if the stock is moving up or down in price. And then the size of the candle is going to be determined by how big of a move in price that was. So you see this big red candlestick here. That means that at this time the stock dropped in price by quite a bit. So that's basically the type of charts that I was looking at to watch the movement of stocks that I might be trading. And you know, if this doesn't make a heck of a lot of sense to you, that's okay. But for some of you who might be trading, then you might already be very familiar with candlesticks. So I'll show you some of the other stuff I was using that kind of took it to another level. So there's basically these custom indicators that you can get and set up on your Thinkorswim platform. And these custom indicators would essentially give you signals that would try and tell you if it was a good time to buy or sell the stock you were trying to trade. So this one in particular here was called the MACD, which stands for Moving Average Convergence Divergence. I know, it's pretty crazy. And this one was called the Stochastic Relative Strength Index, or just Stochastic RSI. So basically the idea was that these two lines are kind of like moving averages. And if you see here how it crosses, how the red line crosses the green line, that would typically be, or sorry, the green line crosses the red line actually. That would typically be a buy signal. And as you can see in the price here, it had fallen quite a bit. And then right when these lines crossed, the price continued to go up. So it can kind of be like a confirmation that the direction that the stock's going in, that it might actually be a trend. So that was kind of the purpose of using different indicators like that to watch the stock that you're trying to trade, and these would hopefully give you a better edge and give you kind of indications and signals that you could use to try and better time your trading of the stock. So yeah, that's what I was doing, and it was pretty crazy. I even joined this chat community of active traders who were actually really supportive, and everyone was just kind of sharing their strategies and information. So I felt really great, and especially with all the other stuff I had going on, like my crazy convergence, divergence, and stochastics and all that stuff, I honestly felt that I was privy to this like scientific advanced trading strategy that was really going to work. So I eagerly awaited my 18th birthday. As soon as I turned 18, I headed over to a local bank branch to open up my first brokerage account. I just want to point out that at this time, which was about 8 years ago now, geez, I'm getting pretty old here, I'm really dating myself, but we didn't have apps like Robinhood or services like Wealth Simple at this time, that wasn't really available to us, which meant that you actually had to go into a bank branch and speak to somebody to open up an investment account. You couldn't just do it at home on the couch in a few minutes. So my conversation in the bank branch with the financial advisor there went kind of like this. Hi there, I'd like to open up a self-directed brokerage account, please. Yeah, sure thing. I have to say, you're pretty young to start investing. Good for you. Thanks. Yeah, I'm really looking forward to getting started. All right then, well, let's get you set up. So the first thing that I'll need to see from you is some ID. Thank you very much. He must have sensed that I was super eager because then he asked me, hey, so you pretty much just turned 18. Wow, you really are just ready to go. Do you have like a hot stock tip or something like that? He said it kind of jokingly, but I think he actually meant it. So I paused for a second and said what I thought sounded really cool at the time. Yeah, something like that. Nothing like a bit of youthful arrogance, eh? I think the reason why he kept asking me that question was because of how confident that I seemed at the time. I think he actually thought that I was maybe like privy to some kind of insider tip on a stock or something like that. But no, I did not have that at all. I just was super confident about this amazing trading strategy that I thought I had. But in reality, I was about to get a very rude awakening at the hands of the stock market. Now that I had my investment account all set and ready to go, I fired up Thinkorswim and had my eyes glued to my watch list and indicators. Sure enough, one of the stocks I was watching seemed like it had started to go on a run. The moving average convergence divergence looked good, and the stochastic too. My heart was pumping. This was it. I quickly placed a trade.
No!
The stock plummeted. This was my first taste of what's known as a pump and dump. So basically what happens in one of those is a stock gets rapidly pumped up in value. So this will kind of trigger a lot of people who are traders to think that this could be a good potential trade. So everyone kind of piles in and starts buying that stock. And the price shoots up rapidly. But then the people who pumped it up in the first place sell their shares once they've made a nice profit, and then a whole bunch of mass selling takes place as everybody offloads their shares. And usually the people who are kind of inexperienced are the ones who get caught holding the bag at that point. And that was me. But wow, what a rush. I mean, the fact that I had just lost money did not deter me at all because it was absolutely exhilarating to experience that in the first place. And I think this is what gets a lot of people hooked on doing things like trading, because it's very similar to gambling in this sense, where you can kind of get almost addicted to that feeling. And from this point, I would become kind of obsessed with it. The reason for my obsession with stock trading was because I thought of it kind of like this. In life, we come up with ideas that then can generate money for us. Some of these ideas are starting a business or getting a job. These things definitely generate money, but they're kind of a slow way of converting an idea into money. Trading stocks, on the other hand, was an extremely efficient way of making this conversion. All you had to do was simply make a mental decision, hit a few keys on your computer, and boom, an idea becomes money. This was a huge revelation for me. I mean, the concept that you could so quickly and so efficiently turn an idea directly into money, I became absolutely obsessed with making that happen. And so I tried to essentially beat the market for a few years. And I would say through mostly just sheer luck, I actually did. But there were a few huge problems that I want to share with you. And I wasn't day trading for that entire period because I couldn't really day trade and do school at the same time. So I kind of transitioned into swing trading for a period of time. But I really want to say that I strongly would suggest that you do not do this, that you do not day trade, that you do not even swing trade. It will mentally mess you up. I mean, picture this. Imagine being a professional gamer. So you're gaming for, let's say, 8 hours a day, but there's way higher stakes in this case because if you win the game, you get money. Sure, that's similar to a professional gamer. But if you lose the game, you lose money. Now that's different. That's higher stakes. And when the markets aren't open, usually what you're doing is you're studying, you're analyzing, you're getting ready for the next day. And a lot of the times people wake up before the market opens, like really early, so that they can check the futures market and see kind of what the trends are for the day, and so they can check the news. I was waking up at 6 a.m. to start reading news and checking the futures and all this crazy stuff. The mental bandwidth required for this is just insane, and it's unhealthy and just not sustainable for the long term, at least in my case. The likelihood that you will fail is just so high. I mean, the odds against you are way worse than gambling. Depending on whose stats you're looking at, it's often quoted that something like 90% of day traders are going to fail. I mean, why would you try and do that? I understand the appeal of trying to make money in your boxers at your computer, but trust me, there are much better ways to do this without losing all your money at the same time. Now, what if there was an investment solution that was the exact opposite of this? What if there was a way to invest that instead of requiring your mental attention 12 hours of the day, only required it for maybe a couple hours a year? Or what if there was a way to invest that instead of losing 90% of the time, it actually beat the people who traded 90% of the time? If you've been watching my videos already, then you'll know exactly what I'm talking about, and that's index funds. If you're new here, an index fund is just quite simply, based on statistics and evidence, the best way for the vast majority of people to invest their money in the stock market. This is simply proven by data that's very clear. And this is how I now invest. I graduated from day trading to swing trading to options trading to stock picking, and then finally I found the index fund and I fully accepted it into my heart that the stats just don't lie. So I hope that me sharing my experiences of trying to trade, even though they were successful for a period of time, they're just mentally not good for you and they're just not sustainable for the long term. And if I've piqued your interest in index funds, then I highly suggest that you subscribe to my channel, Cash College, and check out some of my other videos that I've done about index funds, but also just keep your eyes out for some new ones because I'll be talking about them a lot on this channel. And I'm really excited to do that because if you don't know what index funds are right now, then I'm very confident that they'll change your life in such a positive way like they have mine. And with all that being said, that's it for me today. So I hope you enjoyed today's video. I hope it was helpful. If you like this video, there's a button for that. Thank you so much for watching, and I'll see you again soon.